Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Csc Financial Co. Limited annual report. Csc Financial Co. Limited offers a wide range of financial services to its clients globally. At the core of its operations are investment banking services, which include securities brokerage, underwriting, and sponsoring, as well as trading and investment of securities. The company's services also extend to wealth management, where it provides financial advisory services, agency sale of securities investment funds, margin financing, and securities lending. Additionally, Csc Financial offers custodian services for securities investment funds, market-making trading business of listed securities, and sale of precious metal products. In the realm of asset management, the company provides equity and debt financing, brokerage agency services, specialized research and advisory services, and private placement offerings. It also offers commodity futures brokerage, financial futures brokerage, and project consulting services to its clients. Furthermore, Csc Financial Co. Limited engages in investment management, including raising and managing investment funds, investment management of equity investments, and investment consulting. Its comprehensive range of services caters to the diverse needs of corporate and personal clients in mainland China and internationally. Csc Financial Co. Limited market capitalization of $84 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Csc Financial Co. Limited holds a significant advantage in their industry. Csc Financial Co. Limited trades at a lower price-to-earnings ratio of 9 times and a higher price-to-book ratio of 0.88 times relative within the industry. This suggests a potential market detachment, as Csc Financial Co. Limited trades at discounted levels while the broader industry remains fairly valued, warranting deeper fundamental analysis. Now, the company exhibits a very high leverage profile, with liabilities accounting for 81% of total assets. This elevated debt level warrants heightened caution, as it may limit the company financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 3.33%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth for a financial institution can be attributed to several key factors. Firstly, investment banking business leadership with consolidated advantages and prominent competitiveness has contributed significantly to revenue growth. Additionally, dual transformation in wealth management and AI for the brokerage business has also played a crucial role. Furthermore, scale growth and capability upgrades in the institutional business have led to increased revenue. Robust market-making functions contributing to diversified revenue streams in the buy-side business have also been a significant driver of growth. The rapid growth of the international business, particularly in China Securities International, has exceeded 100% year-on-year. Other notable drivers of revenue growth include the increase in total issuance scale of credit bonds and local government bonds, underwriting scale by securities companies, and offshore bond issuance volume of Chinese-funded enterprises. The expansion of research coverage of listed companies, increase in institutional clients using prime brokerage services, and growth in algorithmic trading execution efficiency have also contributed to revenue growth. In contrast, the primary drivers of revenue decline are largely related to reserves and losses from previous years. These include statutory surplus reserve, general risk reserve, and transaction risk reserve, which collectively account for a significant portion of revenue decline. The financial performance of a company has shown significant improvement in recent years, particularly in its international business segment. The net income in this segment has increased by over 100% year-over-year, indicating a substantial growth in revenue and profitability. This increase can be attributed to various factors, including the company's investment in information technology, which resulted in an additional Rm694.2857 million in net income. As a result, the overall net income attributable to equity holders of the parent company has also seen an upward trend compared to previous years. In addition to the growth in net income, the profit margins have also shown improvement. The profit margin increased by 2.29 percentage points to 10.53%, indicating that the company is able to maintain a higher level of profitability despite increasing revenue. This increase in profit margins suggests that the company's cost management and pricing strategies are effective, contributing to its improved financial performance. The company's financial performance is a testament to its ability to generate significant operating cash flow. According to the provided information, net cash inflow from operating activities was RMB 42,720 million in 2025, marking a substantial increase of RMB 41,655 million year-over-year. This positive trend is evident across multiple pages of the report, with each instance confirming the company's ability to generate significant operating cash flow. The YoY increase in net cash inflow from operating activities is particularly noteworthy, indicating that the company's financial health is improving over time. The impact of this positive operating cash flow is also reflected in the company's cash and bank balances, which have increased as a result of these inflows. This suggests that the company has sufficient liquidity to meet its financial obligations and invest in future growth initiatives. Overall, the data presented clearly indicates that the company is generating positive operating cash flow, both in 2024 and 2025. This is a strong indicator of the company's financial stability and ability to sustain its operations over time. The company's debt level and interest expenses have undergone significant changes. On one hand, the total domestic debt financing business increased by 16% from RMB 111,255.27 million to RMB 129,729.82 million. Additionally, the total debt has risen from RMB 38,450,587 to RMB 116,065,421, and total liabilities have increased from $0 to $557,665,480. On the other hand, interest expenses on bonds in issue, short-term financing instruments payable, borrowings, and lease liabilities increased by plus 11.6% from RMB 4,311,153 in 2024 to RMB 4,776,805 in 2025. However, there are instances where interest expenses have decreased, such as a 135,956 decrease from RMB 7,897,001 in 2024 to RMB 7,761,045 in 2025. The short-term borrowings also show mixed results, with credit borrowings increasing from RMB 3,858,353 in 2024 to RMB 7,978,408 in 2025. However, interest rate ranges for fixed-rate borrowings decreased, and there are instances where short-term borrowings have actually decreased. In conclusion, while the company's debt level has increased significantly, interest expenses show a mixed trend, with both increases and decreases observed across different periods. The company's performance across various segments and regions has been mixed. On a positive note, investment banking maintained its industry leadership, while brokerage business made significant strides in wealth management and AI. The institutional business achieved scale growth and capability upgrades, solidifying its position. Asset management business stood out with the highest revenue of $16,745,808. The international business also performed well, with China Securities International experiencing year-on-year growth in operating income and net profit exceeding 100% and 150%, respectively. In contrast, other segment, which includes commodity trading and treasury function, struggled with the lowest revenue among all segments at $1,452,736. The Wealth Client Services segment also underperformed, with its operating profit being the lowest among all segments. Management is emphasizing a strategic approach that prioritizes value creation, high-quality development, and serving the real economy and social wealth management through financial services. The company aims to become a reliable product provider, strategy provider, and transaction service provider for domestic and overseas clients. Key strategies include strengthening investment capability development, business digitalization, and intelligent transformation. Management also plans to leverage China's capital market opening up to deepen cross-border presence and provide comprehensive financial solutions to foreign institutional clients. In addition, the company aims to advance asset management business towards high-quality growth by expanding Chinese mainland high-net-worth clients and institutional funds, enhancing global resource allocation capabilities, and optimizing cross-border service processes. Effective risk management processes are also in place to manage market risks, including credit quality assessment, issuer ratings, and concentration management mechanisms. Management emphasizes the importance of long-term development strategy, major investment decisions, and communication with stakeholders on important sustainability/ESG matters. The company has strengthened its internal management processes to comply with regulatory requirements and established a robust system for managing external data and intellectual property. Overall, management is committed to driving high-quality development, rewarding shareholders with commercial value, and serving the real economy and social wealth management through financial services that support technological innovation, industrial upgrading, and green development. The company's financial performance is a testament to its stability and profitability. One key indicator of this is the payment of dividends, which demonstrates the company's commitment to returning value to its shareholders. According to the provided information, the company has indeed paid dividends in the amount of RMB 0.56 billion. This is further reinforced by the summary on page 218, which explicitly states that dividends. Yes, the payment of such a significant amount indicates that the company's financials are strong enough to support dividend payments, providing reassurance to investors and stakeholders alike. The payment of dividends also suggests that the company has generated sufficient profits to distribute among its shareholders. This is a positive sign for the company's overall performance and bodes well for future growth prospects. That concludes the financial summary for Csc Financial Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.